Welcome to the Payments Podcast. I'm your host, Bottomline Managing Editor Owen McDonald. In a no nonsense world of business payments, it's good to have friends. Partnerships and collaborations form a network of networks, in a sense, always running in the background, often providing hands on services from onboarding to integration to cybersecurity, right down to the final payment. When economic conditions get weird and complicated as they are now, we need friends and partners even more. To cut the Gordian knot on partnership value in troubled times, we can think of no better guest than Mandy Miller, Chief Customer Officer at Bottomline. Mandy Miller, welcome to the Payments Podcast.
Thanks, Owen. Glad to be here.
We're going to get right into it. And I would like to ask you how the role of Chief Customer Officer has changed in recent years. We had pandemic era changes, shifts in the banking landscape, new products and services, plus ever demanding customers. So tell us what's changed.
So, the overall role of the chief customer officer and the customer organization really remains the same. And it's helping customers win and helping grow the company by focusing on the customer post sale. And we've seen the evolution over the last 2 decades from a pure focus on the customer journey to a more financially driven focus on retention, and then a more strategic focus on retention and expansion. And now, our favorite metric, net revenue retention. Given the cost of getting net new customers is so much more expensive than the cost of keeping our customers and growing that relationship, we have to constantly for new ways to make things better for our customers and our customers' customers. In the industry, banks and financial services have been going through a really interesting evolution driven by customer demand, customer experience, and ever increasing needs in fraud and risk protection. On the consumer side, like things like real time payments and customer demand for controlling where and how people send money and how much they're willing to pay for those services, that's created new payment schemes, new payment types, and put lots of pressures on those that have existed for decades. And now we see that same evolution on the corporate side, which is really pushing banks and financial institutions to rethink the services and solutions that they offer their business customers. So the CCO role, with a very important metric of net revenue retention, has to help customers find ways to survive and to thrive in the midst of that true transformation. And through our touch points and critical customer facing functions like implementations, like support, like customer success, we have to understand more about our customer solutions and their way of working. And we have to understand the challenges they face in their own revenue streams and competition in order to drive further use and expansion of our own. And I think we have this great benefit of being in the middle of many banks and partners. And that unique position helps us influence that usage based on where we see the shifts in paradigms and where we can drive value. And I think one of the key skills of the CCO over time has really been the ability to connect dots for our customers across those touch points that we have to influence their use and expansion. And now we really need to connect those dots across a broader ecosystem, not just our customers, but our partners, their competitors, to drive through, value and be able to steer them into adoption of our solutions.
I was interested in your focus there and your comments on partnership. Of course, our topic for this episode is how B2B payments partnerships help weather downturns. Mandy, what are some of the key challenges banks and financial institutions face when delivering payment services to commercial customers in troubled economies like this? Why are payments partners so crucial to success in these types of times?
Yeah, great question. So, when delivering payment services to commercial customers, banks have to deliver on a promise of value and of excellent experience. And they're competing to keep the business of their customers every day because every other bank or FI is knocking on the door to win that business. And for commercial customers, as we say, cash flow is the lifeline of their business. And banks and FIs need to protect their customers by guiding them in the application of the services that they offer and to help them grow and manage costs, especially in days like today. Key challenges for banks in offering those services to business customers are ease of adoption, a demonstration of value, the ability to scale across a wide range of industries, transparency, and a simplified, efficient customer service experience. And we know the menu of what banks and FIs can offer their customers is growing. And that can be very taxing and overwhelming on the bank to sort out which offers to focus on and for each customer. So, partnerships, and I'll give a couple ways that I think partnerships are really helping banks and FIs in the face of all of what's challenging for business customers. So, one area is how partners can assist banks in bringing those solutions to their customers. There can never be enough salespeople to cover an account and present every type of solution and service that they offer. And so they need partners who provide more frictionless ways to present those offers to their customers. And they need partners who can supplement and complement their own sales organizations and sales motions. As an example, at Bottomline, we've started to introduce dynamic offers that are presented in app to the user to tell them what they could save or earn by adopting a service that our banks are offering, our service through the bank channels. And if they choose to enroll, they're taken to enrollment screens on our application that get them through that process in a self service mode. So that's fantastic way to add value, not just to the bank channel, but also into their corporate customers. And then for more complex sales, we have a sales organization that is organized by our bank channel. So we're very aligned to the bank. And Bottomline provides the sales expertise on our pay mode product so the bank salesperson can bring them directly into the session to demo and discuss value as well as the details of onboarding. So that's a way that we help the bank channel scale to offer a solution that drives value to their customers. And on the back of the experience that we're driving to those customers, and ensuring that they have an excellent experience, we're looking at more and more ways to offer AI in our support solutions so that we really help make that an expedient service and get right to the heart of an issue and make it more and more smooth and less friction.
Moving on, open banking rules and other data legislation are creating new opportunities for collaboration between legacy banks, fintechs, payment service providers. Mandy, what kind of help are banks and FIs seeking in the second half of this unpredictable year? I am curious about your big picture view on this, but also specifically, why are banks seeking PSP partners, payment service provider partners, now more than ever?
Yeah. Yeah, great. Well, cost takeout and revenue growth continue to be the key areas of focus. And I'd say revenue growth through winning new customers as well as replacement of revenue from sources impacted by the evolution of payments or other things happening in the market. And of course, we don't talk to a single customer where security, fraud, and risk are at the top of their list of objectives as well. And then layer onto that, like you said, a very dynamic environment to operate in with lots of uncertainty in the economy. And I actually think this uncertainty is a wonderful reason why banks and FIs should lean on partners like Bottomline. And that allows them to focus on the things that they can control, can manage, can influence, without huge investment into a new or different area. Let the partners who live and die in that type of area. So our focus at Bottomline is on financial services to support business payments and allow us to use our deep expertise, our knowledge, and our touch points in this field to drive value to their business. So they can talk to banks and FIs can talk to partners like Bottomline around how do you help drive our top line? How do you help deliver that at a better margin? And companies like Bottomline are, very eager to help show the business models that we've created, that really help in times like this, that they can count on us. And in terms of security and fraud and risk, a partner like Bottomline, who lives and breathes business payments, that's absolutely one of the things that we prioritize first as well, not just from the infrastructure that we deliver our solutions on, but also the special expertise it takes to protect the payment. And we've got, our solutions around that area too. So I think the uncertainty is actually the best time to lean on partners.
We spoke recently, you and I, and you noted that more banks and corporates are now leveraging partnerships to create new revenue streams. Doing this helps offset the revenue declines and higher operating costs that many businesses are experiencing now. Mandy, talk about payment partnerships that literally pay off through rebates
Mhm.
and discounts, things like that.
Yeah. So I'll go back to the real-time payments topic. These payment types put pressure on long-standing bank revenue streams like wire fees and interchange-related fees. And banks have long-term been looking for use cases that deliver new or different value, even on those new payment schemes, whereby customers are happy to pay for new value. When Bottomline created our B2B payment network, it was created with the purpose of giving bank channels another option to give commercial customers to pay with competition to the price of cards, but with added value to the accounts receivable and accounts payable functions. And because we don't use a middleman in that exchange, we do it on our network. We can do it at reduced fees from card, and we share that fee income back to the bank and back to their business customer. That business model creates a very compelling offer to the participants on the B2B network and new revenue streams to bank channels and their corporate customers. And we've seen this add up to a very, very attractive line for our banks, and it's been a really great value proposition to their corporate customers.
Let's get predictive for our last question, Mandy. What are some ways that you see banks and PSPs working more closely to meet the evolving needs of business payments clients?
So, number one, I think I mentioned it before, but I think AI will become a more and more essential part of how banks and PSPs present solutions to customers and in managing that experience of the customer. And this includes how dynamic insights are offered to steer customers to this option or that option, and to really be specific through an understanding of the profile of that customer on the experience provided to that. So in some cases, that may be complete self-service. That may be the best way to service a certain profile of customer. And in other cases, it may be that a designated person on the other end of the call is always in place to handle a specific profile. The collaboration I think that takes is immense because PSPs are part of the bank's ecosystem, and they need partners that are willing and able and capable of becoming part of that ecosystem via the use of AI. I think the second thing I would think of is pricing. And we've seen some evolution in this space across the board. But I think pricing of services will continue to evolve to require banks and PSPs to earn as customers grow. So it really is a win win. So pricing less on set subscription fees, but more based on value delivered that result in growth to the customer. That combined pricing of banks and PSPs on service delivered, so it makes good sense to a commercial customer. So as an example, if the customer is realizing better cash flow results from the service provided through a bank partner, the fees they pay relative to that improvement, and therefore the fees from the bank and service provider need to be set on that math. I think those are two ways that we see an evolution between banks and PSPs in this space.
All right. It sounds very promising. Banks and service partners uniting to make payments smarter, faster, and more secure. It's a recipe for success in a time of economic uncertainty, and the sector is hungry for more. Our thanks to a great guest, Mandy Miller, Chief Customer Officer at Bottomline. To our audience, the smartest people in B2B payments, thanks for listening. Hit subscribe. Catch us again on your favorite podcast platforms, including Apple, Spotify, iHeartRadio, and YouTube. Bye for now.